The ECB has been forced into action and has stepped into the Spanish and Italian debt markets. And I'm joined by the head of macroeconomics and fixed income research at Intesea Sanpaolo, one of the biggest banks in Italy, Luca Mezzomo, to discuss the move. Luca, do you have any indication how big the bond buying has been by the ECB?
For the moment, no. We don't have a precise idea of the size of the purchases the ECB is making on the market, but for sure the volume seems quite good. We saw activity from early from the beginning of this morning, and the flow was fairly steady. So we think that today, in the end, we could see fairly decent volumes on Spanish and Italian paper.
One of the recent criticisms of European policymakers is that they only ever come up with short-term solutions to fundamental problems. Isn't this just another example?
Yeah. Well, I think that for sure, again, this action by the ECB is a consequence of the fact that the EU failed to come up with a decent crisis management framework 1 year ago when the crisis first started. At this moment, however, I think we needed exactly this kind of action. There was no real problem in terms of fiscal consolidation, especially in Italy, because already there was a very good program to balance the budget on a horizon of 3 years, and the likelihood of having a decrease in debt ratio by either next year or in 2013 was quite good. But there was a big problem with flows at the moment. The market was unbalanced. The domestic market, which was absorbing more and more flows from the Treasury since the last quarter last year, now was had the troubles in absorbing the flows coming from non-residents. And so I think it was the right timing to have some sort of official support for the market, just to overcome this transition period in which, at the end of which, more and more of the supply of government bonds will be purchased by residents.
Germany has taken a stance against further bond buying. Is this just another sign of a split between the ECB and Germany?
Well, I think for sure Germany, since the beginning of the crisis, to some extent has showed often behind the pace of behind the events, and failed to grasp the relevance of the crisis that was developing. Now it seems that they have accepted another partial step to stop the crisis from worsening even further. But of course, it is clear that they accepted it only because there was no other option at the moment. And so I think the real test will come a few months from now, when we saw the EFSF acting as now the ECB is doing. And only in that occasion we'll see how serious the euro area is about using the fund, the reformed fund, to support debt on the secondary market. For the moment, I think now the ECB is doing the right thing, and a great majority of governors seems to be supporting the program. But of course, the resistance of Germany and of the Bundesbank will have an impact, and the impact will be that as soon as the situation will seem to be stabilizing, for sure we'll see a sharp decline in the level of market activity by ECB through the securities market program, and probably will need after that a very serious rebound in bond spreads to see the ECB coming back on the market again.
Mario Draghi is set to take over from Jean-Claude Trichet. Do you know where he stands on the issue?
I think that Draghi, as most members of the governing council of ECB, doesn't really like the ECB purchasing large amounts of government paper on the market. He probably thinks that at the moment this wasn't the only way to stabilize the market conditions. But I tend to think that as soon as the FSF will be ready to operate as the ECB is now doing, the ECB will try to stop its own program.
And what are the biggest risks attached to the ECB buying these bonds? Is inflation the biggest potential problem?
No, I don't think the inflation is going to be an issue because of this bond purchasing program. First of all, because the ECB is still officially sterilizing the impact on liquidity of the bond purchasing program. Of course, sterilizing in a system like the European one is a little bit of a joke because the supply of base money at the moment is more or less endogenous. It is governed by banks, since we still have a full allotment at open market operations. But formally, at least, the ECB is still trying to draw a line between this program and the supply of liquidity. And the reason, and that's why we still have options for 1 week deposits each Tuesday.
OK, thank you, Luca. Later in the week, I'll be taking a closer look at both the Spanish and Italian economies to see if the focus on these countries is just market hype or based on fundamental problems. But for now, goodbye.